Hey everyone, this is a fun video to make the point that I always make, but it's nice to refresh it from different angles with different examples. So today in the chat room, we were pretty active. I'm not an active trader. I don't like to be because I'm busy doing some other stuff, but I'm pretty good with the charts that allow me to have the opportunities. So today, I went ahead and shared the opportunities and they played out super well. Short term. So the point of this video is to make the distinctions between an investment and some sort of a swing trade, say 2-3 days or a week, and a short-term active trade like a futures trader would. So it's an important distinction. When I say, okay, I would buy the dip, you better make sure I know what I'm talking about as far as time frame, because it was probably part of a conversation of sorts. And how I do it depends on the speed of the trade and how I tend to it also. So I'm going to share examples today. This morning, there was an active trade that showed up based on a swing trade idea that I had. I said Apple was rallying with everything, through the moon. What's today? 11/22, Monday. And this relief pop was on Powell headline that, okay, Biden is going to pick him. So that's a relief. He's not going to go with somebody else, right? So then I said, those usually fade. So I already was bearish up here for the day. So then I looked at the open interest in Apple and I said, you know what? Apple has downside pressure in the open interest, like crazy big, like even down to, I said 161, but I really meant like 158, 159. But I didn't want to say it because it would come across bad, super bad, and people would hate it. So I said, I'm going to short Apple. And I did. And then this happened. I don't know if here or here, but I know I caught the downside. And then, so I immediately said, so what did I do to short Apple? I went out and mildly bought cheap puts for Friday. So clearly this is not a conviction short. I'm making the first point. This was a swing trade based on a thesis I had. The thesis was, okay, I'm looking at the open interest and it doesn't look that great, yet the price is going through the roof. What is happening here? So let me take a try at a bearish position. Nothing against Apple, just against its price action today. So I got lucky, quote, and it did this. So what did I do? I could have booked my profit, but it was relatively small trade. So I decided to keep it on, but I sold puts against it, so I made it into a spread. Basically, if you know what that means. If you don't, it doesn't matter. The concept is I locked my profits because it delivered pretty quickly. But I left the trade on for almost free for Friday. So now tomorrow I can revisit it. If Apple opens down and fills this gap, then I have more profits that didn't cost me any risk because they've literally cost me nothing because of how I timed my entry. So this was the spotting of the opportunity via a thesis, executing it and then modifying it to lock in some profits and then determining, okay, I can sleep on it overnight because X, Y, and Z. Okay, that's a swing trade opportunity. It just happens to be for 4 days. Now I'm making money as we're speaking because it's still open. Market is 15 minutes to go. So if I had left it on, like if I didn't do anything, I'd be making money a lot faster. But I decided to lock some of the profits. So be it. I'm still positive and I'm gaining with no risk. I like that. And that's a swing trade opportunity versus what we did with the QQQ was an absolute trade. So all day I tracked the QQQ breakout on a 5-minute and 1-minute and sub 1-minute basis. So those are for fast hands only. And I sent out a note in the chat room, a break above here, this fail, would bring a rally to 405, the ideal target. So I took the trade when it broke out, and it immediately delivered. Literally, it was 10 cents to take the trade, and it was like a 200% win. But I said this is an absolute trade like futures contracts. So futures traders don't sit on something overnight. They most likely actively trade it until the trend is done. For me, it got pretty close to 405. I got out, and because of this guy right there. So I locked my profits, and I got out because it was a trade. Somebody else may have taken it and said, okay, I'm going to sleep on it overnight because of X, Y, and Z. That's different. Mine, it was an active short-term trade based on a breakout. And I specifically said, I'm in and out like futures traders. So I said, expect me out below X. I forgot what was the number I shared, but it was there. It never happened. So I stayed long and took the breakout. I believe this was the second load today on the QQQ. In other words, there was another breakout off of another setup. I don't remember if it was here or here. Regardless, this was the second stent, but both were active trades with fast hands, meaning I get in and I get out. How do I get in and get out differs from people. Some people buy the QQQ, some people buy calls. I bought calls. And I chose this today's calls. This is the the options chain for the QQQ. Whoops, not 4, only 3. There we go. This is E-Trade practice platform, so don't try to read into it much. I'm not recommending it. It's just there. So the 404 were the calls that I bought, and they were 10 cents, and they went up, I can't remember, 30 cents. So that was an easy trade. That was 1 cent. And these die today. In another 12 minutes or so, these will be dead if you're up here. So now it's just a gamble. Now it's just amateur. So people buying this hoping to make money, maybe on a miracle pop into the close, yes, but it's just a gamble. Luckily, it doesn't cost much. Somebody took the trade with Fridays. I spoke to somebody that took the same setup. They only they chose Friday's contract, so they have 3 or 4 days on the clock. Thursday's closed, so they chose to sleep on it long. My note was, I'm taking an active trade for today. So I chose not to sleep on it. That's why I booked early. And luckily, I did it at the right time. Conversely, at the same time, I went long a little bit earlier, the IWM for next Monday, and I shared it. I said, I'm going long the IWM because I like the rotation being out of the NASDAQ into the small caps, they've been down. So if markets want to stay bullish, they're going to have to sell something to buy something. And the small caps have been sold already, so I thought maybe they'll catch a bid. Sure enough, as soon as I entered it, it caught a bid, but it was a swing trade opportunity. I said I want to be long through Monday. So here's the trade that I did. I bought the 235 calls, these, and then the stock rallied. So I said I'm spreading my calls by booking some profits by locking it in and selling some calls for Wednesday. Shorter term. So that would create a spread. It's a diagonal. So somebody asked me, why did I choose to do a diagonal? What is a diagonal? It is, if I opened this to buy, okay, lesson here changed, by the way. Now we're talking spreads. I'm going to show you a visual of it, so it'll be easy to see. All right, I'm going to go to 235. First, I bought this out 7 days. I forgot what it was, $1.40 maybe or something like that. And then it rallied, it turned into $1.65. I didn't sell it. I could have and pocketed the difference. Instead, I could have, I chose to make a spread out of it, which means I sold something against it. I could have sold something in the same period of time higher. That would have created a vertical call spread, and it would have looked like this. Wait, where'd it go? Oh, same one. Like this. If I sold it, it would have looked like this. Now I would have turned into a vertical call spread. Instead, I chose to sell it as a diagonal, which means I took it from here into a shorter dated one and a little bit higher. In fact, I believe I sold the 237s. Okay, so if I had sold the 235s, is it this one? Is this 235? No, that's 234. That's too tight. If I had sold the 235, then this would be called a calendar because I sold the same leg. I bought the 235 calls. I sold the 235 calls shorter dated. So that's called the calendar. Same level, different time. I jumped calendars. But instead, I chose to do this. So I jumped calendars, but I also raised it. I collected less. And the reason why I chose to collect less is just in case we spike in the next couple of days, it's easier for me to manage the position for profit. So I already have built-in profit. this would put more money out of pocket at risk because the cost is higher. It's now $1 versus it would have been 50 cents. I felt that that was too aggressive. I could have gone here. I probably should have. I went here instead. In fact, I should double check. I don't remember now. I did one of these two. But the point is, I stayed long because it was a swing trade opportunity from the get-go. Okay, so let's recap what was the point. The point was to share the difference between a trade setup that is fast-paced, like a futures contract. So I didn't want to hold overnight. I knew I was in here, out there, and I did. That was the QQQ. Versus an opportunity that showed up because of a thesis. That was Apple. And I chose to book profits, but keep the risk on. In this case, because the risk cost me 0. Third one, it's this one where I identified a swing trade opportunity because I thought if markets wanted to stay long, they would likely sell something to buy something, and the Nasdaq has been hotter than you know what. So why not rotate out of the Nasdaq into the small caps? And I thought that the Nasdaq is not going to rally without the small caps finally catching up. So it was a win-win situation, I think. So we'll see. And for that, I did this trade, which I chose to hold overnight, modified it to lock in some profits with this guy. So within that, I added a little lesson about verticals, whereas this would have been a vertical spread, both in the same time frame, 7 days out. Instead, I also offered the opportunity to do it into a calendar spread this way, where you jump time frames and you keep the same level, or like I did, a diagonal, which is this way. So there are chock full of lessons in here, all designed. This video is to help understand the concept. Also, if you're in the chat room, it helps clarify next time we come up against these situations. And by the way, we're doing this every day, even though that's not the point of the chat room. But when we have downtime between discussing, like somebody just asked me about banks and we had a whole discussion about banks, but then there's lulls in the chat room where nobody's asking about anything. So I share these fast trade opportunities, and they are, 20-30% winners like that, or stop out quickly and you get, you risk a little bit to make a nice run. So they're active trades. All right, so hopefully this sheds some light.